Welcome, everyone. Today we are diving into the world of TPO charts. I am excited because by the end of our time together, you will understand what TPO charts are, how they work, and how they can help you make smarter trading choices. We will break it all down in simple terms so you can feel confident using them in your trading toolkit. Ready to learn something powerful? Let us get started. Before we dive into the mechanics, imagine you have a tool that could clearly show you where the market participants were most interested during the trading day. What if you could easily identify where most traders agreed on price or where the market hesitated the longest? That is where TPO charts come in. So first off, what exactly is a TPO chart? It stands for Time Price Opportunity. The name might sound a little bit complicated, but do not worry, it is actually quite straightforward. A TPO chart shows where the price of something stayed the longest during a trading day. Imagine you are watching how a market moves and you want to know which price levels had the most action. That is what TPO charts are great for. They give you a way to see which price levels got the most attention and spent the most time. And this can tell you a lot about where the market might go next. When looking at TPO charts, you will also notice specific patterns that can provide further insights into market behavior. For example, a D-shaped pattern indicates a balanced day where buyers and sellers agreed on price, leading to most trading happening around the middle of the chart. This type of pattern shows consolidation and a lack of directional movement. In contrast, a P-shaped pattern often appears when there is a strong upward move followed by consolidation. This tells you that buyers were aggressive early, but the market found a balance higher up. Meanwhile, an B-shaped pattern signifies strong selling pressure early on, followed by balance, indicating that sellers drove the market down but found support at lower levels. Another important pattern to look for is a double distribution day. In this case, the market starts balanced, breaks out to form a new area of balance at a different level, and creates two distinct zones on the chart. This kind of day is often indicative of strong news or events that have changed market sentiment. Recognizing these patterns can help you understand if the market is likely to continue trending or if it is finding equilibrium. By identifying these patterns, such as the P-shape, B-shape, D-shape, double distribution days, and elongated trending patterns, you can gain an even clearer picture of whether the market is balanced or trending, and use that information to guide your trading strategy. The P-shape often signals bullish consolidation after a strong upward move, while the B-shape points to bearish consolidation following a sharp decline. The D-shape indicates equilibrium, meaning the market is range-bound with buyers and sellers agreeing on price. Double distribution days highlight significant market shifts, often due to news or events, and elongated patterns suggest a trending market that lacks balance. Each of these patterns provides unique insights into market behavior, allowing you to adjust your strategy accordingly and choose the right approach for different market conditions. Think about a TPO chart as a tool that reveals where traders felt the price was fair or worth spending time on. This tells you about potential areas of support and resistance. These levels are often highlighted by patterns such as the D-shape, indicating balance and fair value, or by areas with multiple single prints, suggesting strong moves through those levels. When you see a high concentration of TPOs at a particular level, it means the market has deemed that price level important, and it is likely to act as support or resistance in the future. And as a trader, those areas can help you make decisions on where to buy, where to sell, or where to wait for a clearer signal. By identifying these key zones, you can better time your trades and align with the natural flow of the market. Alright, now let us dig into how these TPO charts work. You will see letters or blocks on these charts, and each one represents a specific time period. Typically, each letter stands for 30 minutes of trading. Imagine it like putting a stamp on the chart each time the market trades at a specific price during that 30-minute period. Over the course of the day, these letters start to stack up at different prices. When you see lots of letters at one price level, it means that price was really important that day. The market spent a lot of time there, which tells us that buyers and sellers both agreed it was fair. Now, when you look at the patterns formed by these letters, you will notice a few important shapes that can tell you a lot about the market sentiment. For instance, a P-shaped pattern occurs when there is an initial strong upward move followed by price consolidating at higher levels. This suggests strong buying pressure early on, which has been met with some stability as traders are happy to accept higher prices. Traders often see the P-shape as indicative of a bullish bias for the day, especially if the consolidation holds. On the other hand, a B-shaped pattern appears when there is significant selling pressure at the start of the session, pushing the price downward, followed by a period of balance or consolidation at the lower levels. This shape suggests that sellers were in control early on, but then found a level where buyers stepped in to stabilize the market. This is often viewed as a bearish signal, and traders look at this shape to identify potential areas of support at the lower consolidation levels. The D shape, or bell curve, is perhaps the most common pattern on a TPO chart. It indicates a balanced market where both buyers and sellers are comfortable with the price. The market has found a fair value for that session, and price oscillates around the point of control. This type of pattern often suggests a range-bound session with no clear directional bias. For traders, recognizing the D shape is useful because it signals a day to focus on short-term, scalping, or range-based strategies rather than anticipating a breakout. Sometimes you will also see double distribution patterns. These occur when the market initially forms a balanced area, then breaks out, often due to news or other major catalysts, and establishes a second area of balance at a different level. This creates two distinct zones of activity on the chart. Double distribution days are significant because they often indicate a major shift in market sentiment. Traders watch these patterns closely as they can signal continuation in the direction of the breakout or give clues about where price might find resistance or support. Additionally, you might notice elongated patterns that lack clear balance areas. These typically indicate strong trending days where the market continues to move in one direction without much consolidation. These elongated patterns are often accompanied by single prints, which show areas where price moved so quickly that there was little to no overlap of letters. These single print areas can become important levels of interest if price retraces, as they often represent gaps in market acceptance. By understanding and identifying these various patterns, P-shape, B-shape, D-shape, double distributions, and elongated trends, you can better interpret market behavior and decide whether to take a position or stay on the sidelines. Recognizing the pattern gives you context about whether the market is likely to continue trending, find support or resistance, or settle into a balanced state. This is key to developing an informed and strategic trading plan. Unlike charts that focus on how many contracts were traded, TPO charts are all about time. They do not show how much volume was traded, but rather how long the market stayed at each price level. This gives you a unique way to see the market. Sometimes you need more than just volume to understand what is happening, and TPO charts are great for that. There is something called market profile, which is really the idea behind TPO charts. Market profile helps organize all the market data so you can easily see which price levels had the most activity. Think about how markets work. They are like an auction, always moving between times when buyers and sellers agree on value and times when they do not. A TPO chart helps show you where the market is balanced and where it is not. A balanced area means buyers and sellers are in agreement, and price is not moving much. An imbalanced area means the market is not agreeing on value, and the price moves quickly. A very important part of a TPO chart is something called the value area. This is where 70% of all trading happened. Think about it as the fair price for that day. It is a crucial area to watch because price often bounces around in this zone, and it is also where support and resistance levels are likely to show up. Let us talk about some of the key features of a TPO chart. First, you have the point of control. This is the price that had the most TPOs during the day. Basically, it is the level that the market thought was the most fair. You should definitely pay attention to this because it is usually the most important price on the chart. The point of control often serves as a magnet for price throughout the day, and the market tends to revisit this level multiple times, making it an important reference point for determining potential reversals or pauses in price movement. Another key feature is called the initial balance. This is the range from the first hour of trading. The initial balance is significant because it establishes the opening range for the day, setting the tone for how the market may behave. If price remains within the initial balance, it suggests a lack of conviction by traders, often leading to a balanced or range-bound session. However, if price breaks above or below this initial balance, it often means a bigger move is coming, and traders use these breakouts to identify potential trend days. Additionally, the initial balance can act as support or resistance. If price returns to this range later in the session, it may either bounce off or break through, giving clues about market sentiment. Another important aspect is the concept of extensions beyond the initial balance. Extensions occur when the market continues to push beyond the initial balance, indicating strong interest in those price levels. These extensions can signal continuation of a trend, and they are often closely monitored by traders looking for opportunities to join a strong directional move. Knowing how to interpret these extensions helps in understanding whether the market is showing strength or starting to exhaust. The interplay between the point of control and the initial balance can tell traders a lot about the day's potential structure. For example, if the point of control develops outside of the initial balance, it could mean the market has found a new area of value for the session, suggesting a trending day rather than a balanced one. Understanding these key features can help you stay in tune with market dynamics and make informed trading decisions based on price action and market structure. Now, let us talk about single prints. These happen when price moves quickly through a range and does not spend much time at each level. These areas can be important later because if price comes back, they might act as support or resistance. You will also notice something called a tail. This is where price moved quickly and then reversed direction. It often marks the high or low of the day and can show us that the market strongly rejected those higher or lower prices. How do you read a TPO chart to make trading decisions? A balanced market on a TPO chart will look kind of like a bell curve. Price spends most of its time around the point of control, which tells us the market is in agreement about value. An imbalanced market, on the other hand, looks more like a spike. Price is moving fast, and it has not yet found a fair value. This tells us the market is trending. If you see price break out of the value area or the initial balance, that is often a sign of a potential big move, which traders love to catch. TPO charts are very helpful for finding support and resistance levels. You can look at the value area high, the value area low, the point of control, and those single print areas. These are all places where you might decide to enter or exit a trade. One common way to trade with TPO charts is called value area trading. If the price moves back into the value area after being outside, it often continues across the value area. Another way is breakout trading. When price breaks above the value area high or below the value area low, it might mean a new trend is starting. Many traders wait to see extra confirmation from volume before jumping in on these trades. And remember, TPO charts work best when you combine them with other tools. Pairing a TPO chart with a volume profile gives you an even better picture. Volume profile will show you where the most contracts were traded, and when you combine that with time, you get a fuller understanding of the market. You can also add moving averages to your chart to help you spot trends or reversals. For example, the 50-day or 200-day moving averages can help identify longer-term trends and provide additional context for TPO levels. Momentum indicators like the Relative Strength Index are also useful to confirm whether breakouts are strong or if a level might hold. Another helpful tool to use alongside TPO charts is Bollinger Bands. Bollinger Bands can help you determine whether the market is overbought or oversold by showing price deviations from the mean. When paired with TPO charts, Bollinger Bands can help identify potential reversal areas, especially when price reaches extreme levels outside of the bands and coincides with key TPO levels. Additionally, Fibonacci retracement levels can also be used to identify areas of interest that align with TPO patterns. By combining these retracement levels with TPO profiles, you can get a better sense of where the market might pull back or find support during trending days. Do not forget that you can also use candlestick patterns to enhance your analysis. Candlestick formations such as engulfing patterns, pin bars, or doji candles can provide important clues about market sentiment when they occur at key TPO levels. For instance, a bullish engulfing pattern forming around the value area low could indicate a potential reversal and provide an opportunity to enter a trade. By combining TPO charts with these other tools, you can significantly increase your chances of making well-informed trading decisions. Each tool provides a different perspective, and when they align, the confidence in your trade setup can grow stronger. If you are interested in getting started with TPO charts, here is how you can do it. First, set up a TPO chart on your trading platform. Make sure you choose the right time frame, whether you are looking at daily, weekly, or intraday action. Then, start marking those key levels like the point of control, value area, and initial balance. Pay close attention to how price behaves around these areas. Breakouts and rejections can lead to some of the biggest moves, so keep an eye on price action when it approaches those zones. Of course, there are some mistakes that many people make when using TPO charts. One of the biggest mistakes is ignoring the bigger picture. Do not just look at one single day's TPO chart. It is important to consider the broader market context. Make sure to look at higher time frames to understand the overall trend before making trading decisions. A good practice is to analyze the weekly or monthly TPO charts to determine the overarching market sentiment and see how the daily patterns fit within that context. Another mistake is overreacting to every little price movement. Not every move is important. You need to understand if the market is balanced or trending before making a call. Traders often get caught up in minor fluctuations, which can lead to impulsive decisions. It is crucial to differentiate between normal price noise and significant movements that indicate a change in market structure. By focusing on patterns such as D, P, or double distribution days, you can avoid unnecessary reactions to minor shifts. And lastly, do not forget about volume. TPO charts are all about time, but it is just as important to understand how much volume is traded to confirm if a move is strong or weak. Volume analysis can provide the confirmation you need when price breaks out of key levels like the value area or point of control. Low volume on a breakout may suggest a false move, while high volume can confirm strength. Combining TPO with volume helps you validate key price levels and avoid being caught in false breakouts or weak trend attempts. All right, let us recap what we have talked about today. TPO charts help you understand market behavior by showing how much time price spent at each level. We covered key features like the point of control, value area, and initial balance. These features help you find important support and resistance levels and give you a clear picture of the market structure. Start by setting up a TPO chart, marking those key levels, and combining it with other indicators like volume profiles to get even stronger trading signals. If this seems like a lot at first, do not worry. TPO charts might seem complex, but once you practice using them, they start to make a lot of sense. Keep practicing, keep refining your skills, and soon you will find them to be an incredibly valuable tool for your trading decisions. As you start identifying patterns like the P-shape, B-shape, D-shape, and double distribution days, you will gradually build an intuition for reading the market. The more you engage with these concepts, the more natural it will become, and soon you will find yourself spotting key levels and patterns instinctively, which will make your trading decisions more confident and precise. Now, what do you think about TPO charts so far? Do any of the features stand out as particularly useful? I would love to hear how you plan on using TPO charts in your own trading. Keep asking questions and stay curious because that is how we all keep learning and getting better.